Hi everyone, this is going to be a lecture on weekly session time models. So we're going to be beginning with Iscariot, the Judas of the weekly session, right? So we're comparing that with the New York session. Before we dive in, I'm also going to be talking about potential confluences between New York session time models and weekly session time models. We touched on that briefly with the Model 111 lecture. However, we will begin talking about it more so now as we are diving into the weekly session time models, right? So this specific model is occasionally very non-volatile, and it is used to generate low resistance liquidity throughout the week. But occasionally you will see an AMD, accumulation, manipulation, and distribution, throughout one of the inner intervals for this model. Now, there are discrepancies in time when it comes to the commodity you're trading, whether it is a indice or you're trading stocks, forex, or crypto. There are discrepancies, and we will talk about how to manage those throughout the week and distinguish them, but in more detail. But just plainly, in a basic manner, you're essentially just looking at the actual time fibs. You're not paying attention to the actual times to a certain degree. So you are looking at, let's say, you draw the time fib throughout the week for a stock, then yeah, obviously you'll be looking at so and so time. You expect this to be the root candle, and this interval you expect a reversal, etc., etc. But we're not looking and comparing it to, let's say, a crypto. So if you're looking at UPS, which is a stock, you're not going to be comparing that exact time to Bitcoin because Bitcoin's going to have different times based off the time fibs. And we'll talk about how to distinguish that and differentiate that. Now, Iscariot is the betrayer of the weekly session. So occasionally you just see engineer liquidity, low resistance being formed throughout the week for this model, especially if the day after, potentially a Tuesday or a Wednesday, you have a major news event, whether that's CPI, producer price index, GDP, unemployment numbers, etc., etc. If there is a large news event following Iscariot, and let's say it's a stock and there's earnings, same idea, same concept, and they usually, and by they I mean the market makers, they use this interval to create low resistance liquidity. And the next weekly session time model, Aries, then takes out that liquidity with ease. However, this specific model can still be useful because the root candle, which is the excuse me, the 0.1125 of the inner interval, which I'll portray in a second, can be extended throughout the entire week. So it's the same concept as the 953 candle with the New York session, right? The same thing can be applied to the root candle for Iscariot. It can be extended out throughout the week, and not always, but occasionally, you see a strong move at the end of the week, most likely during Ash Wednesday or Icarus in most occasions, back to that root candle. So we will take a couple um, examples, look into those, but in most cases, you do see that occur. Now, as well, if there is an SMT, let's say in Iscariot, then that's a high probable trade, especially if you time that with a inner interval for Iscariot. Basically, if you're well aware of the circle of 9 Fibonacci numbers, Iscariot just takes place between 0 and 0.1125. In between that, we get more fractal and we create the inner intervals, right? And that's where we get the root candle from. So there's no confusion there. But essentially, that's the time period we're looking at. So let's say for a regular stock market. The stock market opens at 9:30, New York. And let's say there's no missing days. There's no missing Tuesday. There's no missing Monday. There's no holiday. It's a regular week. Then we can extend the circle of 9 fib from 9:30 on Monday to the following Monday, 9:30. And there we can get our intervals. Now, if there is a missing day, let's say there is no Monday, then we'll begin at Tuesday with the time fibs. And again, we'll just extend it out to the following Monday still. Not Tuesday, following Monday. Now, what's different for Forex and crypto, excuse me, Forex and crypto is that it's from Sunday, 5 p.m. to the following Sunday, 5 p.m. That's the difference between stocks, futures, and these two right here, Forex and crypto, is that the interval begins on Sundays, 5 p.m. to the following Sunday, 5 p.m. There's a couple reasons, but the most notorious one is because Forex is one of the most liquid markets in the world, followed by potentially crypto. The entire world trades Forex and crypto. So you can make assumptions as to why the interval would begin from this time, right? Let's look at a couple examples here on the presentation before we dive into an actual chart. So as I mentioned, in most occasions, Iscariot is going to create low resistance. Now, if you studied the Judas lecture, this is going to look very similar. Again, time and price is fractal. So what we see on the Judas for New York session, we're now seeing it on the weekly session. So you can see here, we're creating on UPS 5-minute chart. So we're starting from the 9:30 open to the following 9:30 next Monday. And in that, we get our interval for Iscariot between 9:30 to 13:10. For stocks, unless there's a missing day, the times will not change, which is absolutely amazing. Same thing for Forex and crypto technically and futures, but the times will not change, right? And throughout this whole interval, right here, Iscariot, what is price doing? Just creating low resistance buy side. And it's pushing into a new day opening gap PD array. Now here on the next larger interval, we get that expansion to take out that buy side. And this right here is Aries. But we're focusing on Iscariot because what is it doing? Just like Judas and Model 11, you see the fractal nature here. It is creating low resistance liquidity. So potentially we can expect that to begin to take that out at 1310, potentially. And we put a stop at an appropriate level. Maybe you're managing your portfolio with a proper risk amount. But if we don't see that, then we can try again during Aries. And in this example, you'd be successful. But the main focus of this is that it's creating low resistance liquidity, and it leaves the root candle, which is the 0.1125 inner interval of Iscariot. So we get fractal here. You see what I'm talking about? So Iscariot is taking place from 0 to 0.1125 for the week. Then we get more fractal, and that's where the root candle comes from, right here. Okay? Another outcome, same outcome, but it's a different week, same stock. So what is Iscariot doing? Creating low resistance buy side within this interval. So we're going to be focusing on this general area right here when it comes to time. Now, again, at 1310, we can try a long. In this case, you'd be partially successful. And notice what price does. Because this is such a large wick candle, we are using the wick and not necessarily, you can use the opening price. You can see how price hits that. As we talk about with the root candle is the opening price. But for this example, we're also using the wick. And we can see how price, 1310, decides to push back to that root candle, Iscariot. So if you're intraday trading, you don't necessarily have to swing a position. right? If you don't feel comfortable doing that with options, Forex or futures, you can still scalp potentially. So if you're trading, this is still one day right here. This is Monday. Iscariot ends slightly midway through that Monday, end of day. But potentially you can do a short-term trade here for UPS, an option trade. You could use price to distinguish where your entry would be, maybe a 5-minute inversion, or you can use the fractal nature and the confluence, which I'll show an example of soon in this lecture. You can use a New York session time model in confluence with 1310, the end, for stocks at least, the end 1310 of Iscariot. So at this point, you could potentially use Model 1001 because it's within that vicinity, right, of that time period in New York session. And what would be your target? Well, maybe you're using the 953 candle if you're trading New York session time models. But look, simply put, just use the Iscariot. Take profit there, and that could be a nice potential quick and easy scalp. So here we have our 955, opening prices down here, closing prices right here. This is the root candle. So here, this is going to be a different lecture, but the previous time model from the last week, Friday, Icarus, right before the Friday ended, it created low resistance buy side here. Iscariot continued to create that buy side right here. And then what happened between the 0.36 and the 0.5625? You saw a move below the root candle, potential buy opportunity here, targeting this buy side. Maybe you want to be a bit more conservative and you wait for a breaker block or any type of price action that fits your criteria as a trader or your rule set when it comes to price. But at the 0.5625, we are to expect continuation. Otherwise, we're just going to see, like in the previous examples, engineered buy side being created until potentially the end of Iscariot. But this example right here, we saw that continuation. And we're seeing that continuation until the end of day, Monday. Next day, now we're in the vicinity of Aries right here, time model. Next day, you see a slight bloodbath to take out some of this sell side level right here, internal liquidity of this range. But what does price go to? Back to the Iscariot root candle. Surprise, surprise. And then look at that buying pressure right here. An immense wick. So this could still potentially be a long here for Aries. Now this is a holiday week. There is no Monday. So as I talked about, what do we do for stocks and or futures, by the way? I'll show an example of that. Because there is no Monday, we are starting from Tuesday. So we're just going to simply put the time fib from Tuesday, 9:30, to the following Monday, 9:30. At that point, you notice the timing is different here. And what is usually the 13:10 time on a Monday is now Tuesday right here. So the times are slightly skewed. Nevertheless, it's the same concept and same idea. Notice right here, the root candle, Iscariot. And notice, as I talked about earlier in the lecture, just like the 953 candle, what is price doing throughout the week? Circulating around that specific candle, and it wicks to it right here. Very interesting, right? But just like Judas, you see this fake out, high resistance liquidity, takes out this high, breaks back below this high, and then what happens at the end of Iscariot? You see a large distribution move down throughout Aries, back to this root candle right here. So this is a nice fake out move right here. Now we're going to look at a couple examples of actual price action on a chart, and we're also going to show examples of the difference between Forex, crypto, stocks, and futures, and how to draw them properly. So here we have the future contract NQ. I'll be utilizing the March contract, although at this date of time, I'm currently using the June contract, but nevertheless, the reason for that is because there's more liquidity with previous price action when it comes to this contract for this time period. But for this example, we notice we have Friday over here, Monday, and then the following Monday right here. How are we going to draw our time fib? Now, when it comes to futures, I'm going to turn regular trading hours on, not electronic trading hours. We can still use electronic trading hours to use potential PD arrays when it comes to price on the y-axis, right? But in order to create proper time intervals, because stocks, for example, are working off certain times, such as the New York Open 9:30, and that's when most liquidity gets injected, whether it's by retail or market makers, we're going to do the same for futures. So we're going to have regular trading hours on, 9:30 to the following 9:30. Now here, we now have our intervals: Iscariot, Aries, Ash Wednesday, and Icarus. Now we're going to take a look specifically at Iscariot, which is right over here. We're going to look at the 5-minute chart, and you notice the slight difference in time when it comes to futures and stocks. What normally would be 13:10 for stocks is now 13:20. Slight discrepancy, as I mentioned, although we put them at the same allotted times. The reason for that is because there's slightly more candles when it comes to indices. So you notice right here it ends at 4 p.m. Then there are 2 more candles compared to stocks. That's the sole reason for that. But nevertheless, Iscariot, what is it doing here? Now, you can go a bit more fractal, and I'll show you New York session. This was Monday, March 4th. So now we have our inner intervals. Again, these are there. If you have not read the book, please read the book before watching this lecture more in depth, but these are the time fibs, right? So what is our root candle for Iscariot? Opening price of the 0.1125 of the interval that we're observing. So that is our Iscariot root candle. Okay? And notice how price is gravitating towards that. And look at this engineered buy side here. Doesn't have to take out the entirety of it. It can just potentially go back to 50% of this range when it comes to price. If we were to draw an equilibrium range, you could see how price fluctuates to the 50% area of that and even moves end of day towards that specific level. But notice the timing, the exact timing, and what these candles do thereafter of when that move occurs. So most people would get chopped up here. They see this engineered buy side and they want to target it. And rightfully so. It's low resistance and it's potentially a great target, especially if you time it with an SMT. But if I was trading this intraday, I'd wait for this relative equal low to be targeted first before potentially longing, because that's an easy target for longs, for stops. Now, when it comes to this area here, this is our Iscariot. Again, what was it used for? Just to engineer buy side. So now we're expecting potentially at 1320 on the 5-minute chart for an expansion back up to at least the Iscariot root candle. And if not, based off this range here, 50% of that range. Now, let's go a bit more fractal. And let's observe this day here in confluence with New York session time models. So if I was trading this intraday, I know at 1320, I'm expecting a possible reversal when it comes to the weekly session time model. I know I am below the root candle of Iscariot. So now I'm potentially going to be using Model 1001 for an entry. 1235 and 1409. 1235 root is up here. And between 1320 and 1330 is a potential inner interval for Model 1001. Notice the fractal nature. So New York session, 1320. Iscariot for futures, 1320. Very strange, right? On the 5-minute chart. Now, in this area, I can expect a possible long. So there's a beautiful inversion here. Equal lows were taken out. I understand price can potentially now reverse towards buy side. And notice your potential entry when you include all the time confluences together. And you're expecting a move at least to the Iscariot root candle, which it does so right before 1409. And if you want to hold off to one more contract, then you can get a potential move to the equilibrium of the range, 50%. Very interesting how it's all aligning together. Strange, right? Potentially, you can also, because it's Model 1001 of the New York session, target 1235, which is way up here. So that could have been a nice potential target as well. But let's look at the rest of the week here. And let us observe what happens. So as I mentioned, Iscariot, just like the 953, its root candle is oftentimes used just like the 953 candle. So you see here a large Aries bloodbath move. Ash Wednesday, because this was such a large expansion, is potentially pretty choppy. Thereafter, for Icarus, which is a different lecture, but the whole point is that what does it move back to? The root candle for Iscariot. You can see how price fluctuates around it right here and goes further down and then pushes back up to that specific candle. And if we were to zoom in here, you can see how thereafter price is fluctuating around that as well. Now let us look at a Forex example. So here we have the euro and US dollar pair. Now, just like I mentioned earlier in the lecture, it's the same for crypto. The whole weekly interval starts from 5 p.m. Sunday to the following Sunday, 5 p.m. And there we have our intervals. So you can see Iscariot here, Aries here used for time distortion, Ash Wednesday for that distribution, and Icarus thereafter. Now, this lecture is focused on Iscariot, so let us observe the root candle for that. We go to the 5-minute chart. And we can see a really powerful move. Now, when it comes to price, we are most likely observing an hourly PD array, but notice the timing of everything. So if we were to begin the intervals for the interval right here, let me color code everything just to distinguish it a bit more clearly. And here we can note a couple aspects. So not much is happening here. But what happens at the end? You can see how fractal everything is. So this is like a mini, the best way to put it, mini Iscariot, mini Aries, mini Ash Wednesday, and Icarus. Now we're just getting more fractal. But same thing, same concept. This is the root candle. Now it's 1830 on a Sunday for Forex. But anywhere below it, based off price, we're going to potentially want a long. And we're expecting an injection of volatility at the 0.5625 Fib, which is right here, around midnight on a Monday for this Forex pair. And when do we expect time distortion? At the beginning of Aries. Potentially we can see a continuation. But if you don't see it at one of the inner intervals for Aries, then you're going to likely see time distortion. Nevertheless, that is what happened here. But notice what happened thereafter. I'm going to draw that same root candle and extend it throughout the week. Ash Wednesday now. Different lecture, but I just want to portray that root candle. What does it move towards? The root candle for Iscariot. Dips down into discount, inverses the SIBI on the 5-minute, and pushes back towards the Iscariot root candle. Icarus, random large distribution. Not so random when you use the time fibs for this area. And then again, goes in a discount and pushes back to what? The root candle for Iscariot. Very strange, right? But you can see the fractal nature not just in futures, Forex as well. So now let's look at an example on stocks. Here we're looking at Amazon, which begins at 9:30 Monday and ends at the following Monday, 9:30 for the weekly interval. Now, if we were to get more into detail for Iscariot, then we can see the root candle opening price being utilized there and being used for Aries thereafter for a move down towards sell side. But you can still scalp this area right here using the intervals. I'll show you what I mean. So this is a given Monday, right? And you're observing Iscariot. You're observing the inner intervals. And you're observing the root candle. And you were above his premium and you were below his discount. Now notice, if I were to highlight everything, how price fluctuates around these intervals. Right? So you can see how price pushes, goes into discount again, and chops back into discount. But if you were to observe the New York session time models, you can see a bit more in depth how the accuracy can increase. So when it comes to Iscariot, the 0.1125 and the 0.36 is between 9:55 to 10:50. So if we were to go to the 1-minute chart, we know that Iscariot has the root candle way down here. Also, 9:53 is way down here as well. This area here, closely aligned with Iscariot. So potentially we can see a nice move down to that area if the setup presents itself. But remember, New York session, what is happening here? Judas, see how fractal everything is? Pushes up. And now, what happens between 10:20 to 10:50? Time distortion. But remember, model 11, 10:20 to 11:10. Notice the time right around then when Iscariot gets touched. I'm going to let that sink in for a minute, but so now we know, okay, weekly session time model, we're in premium of Iscariot, and we're entering a new interval at 10:50. So let me look around and check out model 11, see if there's a setup there in order for me to short back to that root candle. Opening price of 1034. Anywhere here is premium, but there's no setup here. I don't want to short just based off, premium levels. I'm going to wait for something to show its hand. And then boom, on the 1 minute chart, you get a nice inversion there. Maybe that's not enough and you want to wait a bit longer. So you break this low. When that happens, you can use that SIBI right here. Put your stop above this high or this high over here. And your potential target, again, is simply just going to be that root candle down there. And you know the timing of when it should get there. How many minutes is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Potentially, you could be done with a day in 17 minutes with 20 minutes to 30 minutes analysis, done in an hour. You made your $500 and you're done. You log out. That's how you use weekly session time models in Confluence with New York session time models. You just go a bit more in depth with analysis. You know potentially when you can set reversal for weekly session time models, the intervals. We can expect time distortion after a large move like this. And where the root candle is and where price circulates around. Very interesting, right? So I hope this lecture helped to distinguish between the difference between crypto, forex, and futures, how to properly draw the time fibs, as well as a few key touches and points when it comes to the confluence of New York session time models and weekly session time models, and also what to observe, as well as the fractal nature of everything.